Welcome to Purdue Commercial AgCast, the Purdue University Center for Commercial Agriculture's podcast featuring farm management news and information. I'm your host today, James Middert, Emeritus Professor of Agricultural Economics at Purdue University, and joining me today is my colleague, Dr. Michael Langemeier, who's the Director of the Center for Commercial Agriculture and also a Professor of Agricultural Economics here at Purdue. We're going to review the results from the September 2025 Purdue University CME Group Ag Economy Barometer survey of farmers from across the nation. Each month, we survey 400 farmers across the U.S. to learn more about their perspectives on the ag economy. This month's Ag Barometer survey was conducted from the 15th through the 19th of September. And Michael, the barometer actually rose a point to 126. I don't think that 1 point change is significant in any way, but it leaves that index 32 points lower than it was back in May, and that was the index's high point so far in 2025. And a year ago, the index was just 88. So it's 38 points higher than it was a year ago. So two contrasting things there. We're lower than we were back in May, but we are still significantly higher than we were a year ago this time. What do you make of that?
I think we're still relatively high after the election. I think that's part of it. We're also going to talk more about this, but I think one of the things that's keeping the index up is livestock. I mean, about 25 to 30% of the survey respondents are primary livestock producers. It's even a higher percent that have livestock, and I think that's helping keep the index up.
Yeah, I agree with that. We've been talking about that for the last few months, and that continues to be the case. The index of current conditions fell 7 points to 122. That's 24 points below its peak back in May for 2025, which was 146. And the future expectation index actually rose a little bit, rose 5 points to 128, but that's after a 16-point drop in August. The September Future Expectation Index was down 36 points from its 2025 peak in May. If you look at what's taken place, there is a little bit of a surprise here in the sense that that Future Expectation Index rose a little bit. That was unexpected, at least by me.
That was unexpected, but I think it is related to some policy questions that we're going to discuss here. I think there's some policy optimism, if you will, that's keeping that index up.
And I don't want to overplay the fact that it rose 5 points. Maybe the more significant note is that it's still down relative to where it was in July.
It makes more sense to me now that it's higher than the index of current conditions. I think the index of current conditions are reflecting the fact that we have really low crop prices.
Yeah, good point. So, it's useful to look at some of the raw questions, not just the indexes themselves. And looking ahead, do you think it's more likely that U.S. ag during the next 5 years will have widespread good times or widespread bad times? And if you look at it, the percentage of producers who expect good times is down 15 points since May, while the percentage expecting bad times has climbed 12 points since May. So it's really flipped in a big way. In fact, those two response rates are actually getting pretty darn close to each other, with 38% saying good times, 32% saying bad times. And if you look at the related question over the next 5 years, are widespread good times or bad times more likely for the livestock or the crop sector? This kind of reinforces the point you were making earlier. People are much more optimistic about what's going to take place in the livestock sector. 64% saying good times for the livestock sector and only 25% for the crops.
It's a 40-point difference, and we're going to go ahead and share the slides that we're talking about here today. That's extremely wide. I mean, sometimes they're similar, and sometimes they're like 10 points apart, maybe 15 points apart, but 40 points, just huge difference in the way they think about the next 5 years.
And, if you look at it on a chart, that line for livestock good times is actually trending up in a significant way over these last roughly 2 years, whereas the crop side has been sideways to down. And in fact, one of the lowest readings we've gotten going back to when we started collecting data in 2015, I think the only time it was lower was a year ago this time in September 24.
Yeah, excellent point. I mean, it hasn't been this low really since we started collecting data in late 2015.
Yeah, it's record low. And so that tells you how dire things are, I think, for crop producers, at least in the short run. If a trade war leads to lower prices for U.S. ag products, how likely do you think it is that farmers will receive compensation similar to 2019's Market Facilitation Program, which is also referred to commonly as the MFP program? 83% of producers expect a program similar to 2019's MFP to provide a backstop to farm incomes. And 62% said very likely, 21% said likely. We've asked this question before. The percentages we got back in the spring when we asked this were positive, but not this positive. People are really convinced now.
Yes, and I think there has been some discussion by policymakers that this is probably going to happen. Whether they'll be similar, who knows?
Yeah, and if you think about it, though, this is one of the things that's backstopping farmer sentiment.
Definitely.
Farmer sentiment, in my view, would be lower than it is without this expectation of an MFP program coming along to bail out crop producers for weak prices. The Farm Financial Performance Index fell 3 points in September to a reading of 88. This month's index is down 21 points compared to where it was in May. And May wasn't actually the high point of the year. I think the high point was January, but May was pretty close. But again, kind of highlighting this big difference in sentiment and perspective that's taken place from May to September. We've really seen a decline.
Yeah, essentially the first 6 months of the year were higher. They were hovering right around that 100, and now the last 3 months we've been at 90 or slightly below.
The Farm Capital Investment Index fell 8 points this month. That's after a rise last month, so it kind of undid the rise that took place a month ago. The September reading is the second lowest reading of 2025. January at a reading of 48 was the lowest. If you look at it on a chart, the index just kind of bounces up and down from one month to the next. If you look at it compared to a year ago, that index is quite a bit stronger, 53 versus 35 a year ago. You go back 2 years ago, it was at 39. 3 years ago, it was 31. So it surprises me that we're seeing that strong of an index for capital investment relative to these last 3 years, given where we're at with, for example, that current condition index.
Yeah, this is very surprising. I think it went up after the election, and it's really stayed up. It bounces around, but it stayed at a higher level, like you said, than it was the previous 2 to 3 years. And partly what's also going on with this question. This question is very difficult to try to figure out whether this is driving the index of current conditions, which is part of, or whether it's driving the index of future expectations. I think it's driving both. And we've got a colleague that's doing some research on looking at the relationship between Farm Capital Investment Index and the aggregate indices. And I think part of when they answer this question, they're partly thinking short term. Is this a good time for crop producers to buy equipment? No. But they're also thinking a little longer term. And so if you're somewhat optimistic about the policy environment 5 years out, you're going to be a little bit more optimistic with respect to this question.
Yeah.
This is a complicated question.
It is. And I guess, one of the things that we've been trying to look results from this in terms of interpreting it was, what's this mean for things like farm machinery sales? And we've done some modeling in that respect and weren't very successful, at least initially. It doesn't seem to be providing a good indication as to what's going to happen with respect to tractor and combine sales in particular, right?
At least short term.
Yeah. If you look at the responses underneath that index, which is the question, thinking about large farm investments like buildings and machinery, do you think now's a good time or bad time to buy them? The index is really interesting. Although the investment index fell this month, the percentage of producers who say it's a bad time to invest is still well below a year ago. So that kind of speaks to what you were talking about, this complicated nature of the question.
And then for a long time, we were at about 10%. Good time was but 10% for a 2-3 year period, all the way from 21 all the way right before the 24 election. And then it jumped up to that 15 to 25 range. And so, and that's true for both the good time, but also bad time. Bad time went down about 10 points and the good time went up about 10 points. And so there's your 20 points.
Yeah. And it's really interesting if you look at it again on a chart going back to roughly September of 21, it's moving sideways, but at a pretty low level. Prior to that time, we were operating at a little higher level with respect to the percentage of people saying good time. So there's been kind of a shift since about 21.
Yeah.
The short-term farmland value expectation index at 106 was 6 points lower than a month earlier, and it was 18 points lower than its 2025 peak of 124 back in May. And again, you look at it on a chart, and it looks like we've got a clear-cut downtrend underway with respect to people losing confidence in the idea that farmland values are going to continue to go up.
When I received the raw data this month, this is one of the questions I really wanted to get a handle on because we all know how important farmland is to the non-current part of the balance sheet, and it's still positive, but it's getting closer and closer to that index of 100.
Are you going to stick your neck out and say what it's going to be at the end of the year?
I think it'll stay above 100, but it's not going to increase. I just can't paint a picture where it increases. It depends a little bit on the timing of the MFP payments.
Good point.
Yeah.
Good point. If you look at the trend, it's drifting lower. So if you had to guess what's going to happen next month, maybe lose another couple of points. So, and if you look at the raw responses to the question, as you were just talking about, this month's change in the index was really attributable to a shift among producers choosing about the same from the higher category. So in other words, it wasn't because more people said farmland values are going down. It was because an increasing percentage of people said that they think farmland values are just going to hold steady, which I think is
very consistent with the Federal Reserve Bank surveys and other surveys that have taken place this year.
Yeah, good point. We've been asking this question going back to 2019, which is, over the next 5 years, do you think ag exports are more likely to increase, decrease, or remain about the same? And if you look at this month's responses, this has bounced around some here in 2025. We've had some months when we really saw a large percentage who thought exports were going to decrease. These last couple of months, it's been much smaller, but we did see a shift here. Producers were less optimistic this month about ag exports than they were in August. The percentage expecting exports to grow fell. The percentage expecting exports to decrease rose. So there's a little less confidence in what's going on in the trade arena.
I'm still surprised that 47% said that they expect exports to increase given that the environment we're in. And so I'm a little surprised at that.
Well, and the related question is, do you expect the increased use of tariffs by the U.S. to strengthen or weaken the U.S. ag economy in the long run? And I think we're starting to pick up what you're talking about, Michael. Fewer people expect it to strengthen the ag economy than what we picked up when we asked this question last spring. Last spring, in April and May, 70% of the respondents said they thought tariffs were going to strengthen the ag economy in the long run. In June, it went down to 63%. And this month, it's down to 51%. So it's still a majority, but it is markedly different than what we were picking up back in April and May.
And we were talking about that the index of future expectations was higher earlier than this year. I think this chart here points to that very clearly. I mean, in April and May, 70% thought the path we were on was going to strengthen the U.S. agriculture economy. That's down to 51%.
Yeah. People are losing confidence.
They're losing confidence long term.
Yeah. This is kind of an interesting question we've been asking for quite some time. And usually the results don't change much from one month to the next, but we got a little bit of a change here these last 2 months. Looking ahead to next year, what are your biggest concerns for your farming operation? So, no surprise, high input cost remains the top concern, followed by the risk of low output prices for crops and livestock. And I think it's largely being centered on crops. But the interesting thing that showed up these last 2 months, and I didn't really pick up on this last month, but it showed up again this month, and that is this availability of inputs. At one point, availability of inputs had dropped all the way to, I think, maybe 5% of the people choosing that as a top concern. In August, it was 10%. This month is 14%. And that caught my eye. That's still not a huge percentage compared to some of the other things we have in responses for this question. But 14% saying availability of inputs, that's interesting.
That was a surprise, and that put it in third place. And so it increased enough to put it in third place.
My guess is that it's related to what's going on with tariffs, and people are concerned about availability of things that we import, for example, whether the tariffs could raise the prices and make things hard to get in that sense maybe people choose to quit importing it. So I think it's related to this whole trade question and the use of tariffs and import restrictions.
And people remember the logistical problems we had back in COVID. Maybe they're thinking back, well, this is going to cause similar disruptions. And
yeah, it's really interesting because, these last 2 months, when we got 10% a month ago, I just viewed that as kind of an anomaly. But when it came in at 14% this month, I said, wait a minute, there's something going on here. So it'd be interesting to see what happens with that the next couple of months and see whether or not that continues to be as strong as it showed up this month. So, and then the question we started asking back in July, and we've asked it 3 times in a row now. And again, this was one we copied from one of the consumer surveys. Would you say that things in the U.S. today are generally headed in the right direction or on the wrong track? And the results have been very consistent. This month, 71% said right direction. Last month, it was 69%. In July, it was 74%. So despite producers' concerns about current conditions, we've got a large majority of producers, respondents saying things in the U.S. are heading in the right direction. And my gut feel, Michael, is that this question captures more than what's going on in agriculture.
Yes.
Right. But it does tell me that producers are, at least so far, still on board with the administration's policies with respect to what's going on in agriculture.
The way I would kind of summarize this, that they're still confident that the policy environment in the next 5 years is going to be better than it was before the election. But I would classify that as being a little weaker than it was a few months ago. And I'm basing that on that question we had about whether tariffs strengthen or weaken the economy.
Yeah. When you drill down, it was clear there's a little less confidence. When you ask this broader question, which encompasses more than just what's going on in agriculture, probably in the respondents' minds, you get a more positive response.
But as long as you get responses like we're seeing with this particular question, that index of future expectations is going to stay higher than what it was before the election. If this starts coming down, then I think that index of future expectations is heading down rapidly.
Yeah, good point. Well, that wraps up the highlights for this month's survey. You can get the full report on the Purdue CME Group Ag Economy Barometer website, which is purdue.edu/agbarometer. And of course, you can always subscribe to our podcast and listen to not only this topic, but a variety of farm management topics on the podcast, the Purdue Commercial AgCast. So on behalf of the Center for Commercial Agriculture, I want to thank my colleague, Dr. Michael Langemeyer, for joining me, and I'm James Minter. Thank you.